Hi, and welcome to the Nordic Unmanned Q2 presentation here from our office in Sandnes, and also today at the Rogaland Investor Forum. So we'll start with our headlines first of all. So in Q2, we grew the revenues of the company with 284%, enormous growth from both from last year, but also from last quarter. We did our adjustment EBITDA of 3.1 million. We increased our flight hours by 293%. We got delivery of our second camcopter system, our main system of drones. We started the first dual deployment in the quarter in France and in Lithuania. We worked quite a lot on the acquisition of AirRobot in Germany, which we announced to the market just after the ending of the quarter. We also worked quite a lot on what turned out to be a successful award of our 20 million euro contract. We increased the contract backlog with 28%, and we completed the 2021 organizational build-up, which is going to come into force later in this half year. So on the main company events, we started the deployment in France in the middle of the quarter. So we have a half quarter with full capacity production, and we moved the deployment we had in Lithuania to Spain in the end of the quarter. We signed our 10 million euro contract with Schiebel, that's added to our order backlog. And we signed two MOUs, one for Middle East with a large company in Dubai covering Middle East and North Africa. And we did the same for Brazil with a heli operator in Brazil for the Brazilian on and offshore market. Both of them we are now in commercial exploration and with hope of building up local presence as joint ventures with these companies. We got the conditional award of the OP46 contract, and we did the acquisition of AirRobot, and we'll get back to a bit more details on this. So first of all, the revenue. So we grew the revenue with 284%. To 33 million, and first half we did a growth of 173% and ended at 50 million. It's an all-time high quarter. We doubled the revenue from Q1 to Q2, and the Q2 revenues are higher than our entire financial year of 2019, and we have now passed our 2020 revenue already now in August. On the breakdown of the revenue, we have now in the second half, we have 57% of our revenue is coming from drone as a service, and then 43% is coming from our system integration activities. And when we look at the different business area, our green solution area represents 54% of the revenues. Defense security is now 29% of our revenues. And if you look at the breakdown of where we are collecting the revenues from, in the first half we did 34% from Norway, then Lithuania is number 2, 23, and Spain number 3. But as you can see, we are quite spread out throughout Europe, and the Norwegian part of our revenue is coming down according to plan, whilst the larger markets in Europe is growing as planned. So let me introduce Trond Østhuus, our CFO.
Yes, so in the second quarter we reported EBITDA of 1.3 million. As in previous quarters, we do deduct the COVID cost of 1.7 million. Or close to half of this is related to salaries when sitting in quarantine, so we think it's fair to do. So we reported an adjusted EBITDA of 3.1 million, which is an improvement of 4.9 million compared to the same quarter last year. And an EBITDA margin of adjusted of 9%. We do the same for the first half. We reported a loss EBITDA of 2.6 million, and do the adjustment and end up with 2.6 million for the first half year, leading to an EBITDA margin of 5%, which do not reflect the underlying business. We see that the margins is scalable. When we grow, we reach a better margin. We have built a platform on the corporate level, so increased activity will scale the margins. Also, we see there was in the second quarter there was a capability build-up, the delivery with a second system, which was only used for 1.5 of the month in the second quarter. And we see the underlying business starting to deliver margins, and our biggest segment, Green Solutions, delivering margins of 30 to 40% on EBITDA level. So growth will improve our margins. We have, during the first half, we made the foundation for strong growth. By 1st of October, we will have in place a complete management group with them Thomas Ladsten will start as Chief Legal and Stefan Lindsø as Chief Technical Officer. So we built a solid organization for growth. We have a more mature organization, insourcing of key functions and so on. So we're prepared for 2022. So further recruitment will be generated from increased activity and hopefully only operational personnel. Also additional staff from M&A activity, as illustrated here. At the end of the year, we expect to be 130, whereof 30 is related to the acquisition of AirRobot. Capital. We took delivery of our second system in May. We have also ordered our third system, which have paid someone. About 37 million will be payable in third quarter. We also committed some capital related to acquisition, and that amount to 55 million, which will be payable in the fourth quarter. Also the 9 million in shares as part of the transaction. So we have a total available cash and credit lines of 124 million, whereof 84 is cash, 20 is overdraft, and 20 is available credit lines. Our investor base has increased from 3,300 to 4,000 in the quarter.
Okay, introducing Lars Lansnes, our Chief Operational Officer.
So we'll do a little bit on our operational highlights for first half of 2021. You notice on the map we have presented this earlier. Now it's, you see, Europe is more or less green, and it's not only Corona certificate, it's also that our light US operator certificate gives us an advantage in getting flight permits around within Europe. Previously we have had scatters, we have different colors, which means that it has taken time and cost associated with getting a flight permit. Now when the customer calls, we can more or less get the operation established quickly by self-approving such an operation. This year we started the year with taking the camcopter in early first quarter. Did the drilling, the team operational in Denmark at Sjællands. The system was then moved further up to Lithuania, where we had a 3-month deployment for the customer on emission monitoring, search and rescue, and surveillance, general surveillance. From there, a second system was delivered in May. Went to France, started operation just out of Calais, where we're still operating on a daily basis. And all of these you will see on Flight Tracker. It's live operational data coming in, and you'll see the symbol on our air vehicles. From Lithuania, at the end of the quarter, we moved the system down to Spain, and it's now doing emission monitoring in the Bay of Gibraltar. On the Indago platform, a lot of activities, both on fishery inspection, on border control in the Black Sea, and we have supported the local authorities, the port authorities in Belgium, in Port of Antwerp. In addition, we have had some training of our new security customers in Holland called BSS. So, and of course, revenue comes from somewhere. Just this in number of flights, we have had an increase of 250 flights compared to Q2 2020. So just first half, more than 200% increase in activity. And you can understand why we also increased the number of staff out there. What we do, environmental monitoring, we do search and rescue. Just think about the channel between France and England. There is migration, so part of our activities is not only performing emission monitoring, but it also foreseeing that if migration, illegal migration is happening, with our equipment we can give the live data back to the end user, which is the French government. In addition, we have done oil spill exercises. And interesting enough, previously on emission monitoring, the Lithuanian government could only test 25% of vessels going through to see if they're within the regulations. Now with this equipment, they measured about 70 to 80% of the vessel traffic going between outside the Strait of Lithuania. Flights and flight hours go a bit hand in hand, even though if you calculate, you'll see that the number of flight hours per flight actually does increase. So a camcopter with normally tasked by 5 hours per flight. We've been up to 8 hours on one day. Totally, we have had a record quarter where we had a couple of days up to 15 hours of flying in our operations. The increase for first half is about 240% from compared to last year, and we're closing in on 300,000 flight hours 300% increase in number of flight hours from Q2 to Q2 year over year. Number of revenue per flight hour is for the quarter 50,593, and it's partly due to the volume is increasing. So the longer the flights and the more flights we do, we at the number of revenue per flight hour reduces a bit. We will see some stabilization of that in the coming year. Yeah.
Okay. So we are very satisfied with the activity, obviously, and the team has done a tremendous job of doing this growth that we have done so far. And our COVID-19 cost is also the payment or the extra payment we are gladly giving them as a result of the effort they are doing. So a lot of quarantine, a lot of testing. Norway is extremely hard country to be living in when you want to do business outside Norway for time being. But that's hopefully gone now when vaccines are coming and everything. So if you look forward to our backlog, so the net increase is 81 million. So basically we have been using backlog, and now for the first time we are adding backlog for 2025. So we're going to come to strategy and 2025 strategy yet, but already now we're starting to build backlog for 25. We are at 364 million in backlog, and that's not including the conditional award that we received of that would be 205 million. As the contract is not signed yet, we'll add that to the backlog. So we have a lot of good backlog to be working on. And if we look at the CRM pipeline, so we have over the last quarters trying to explain the size of the market, not by someone else's number, but by our numbers. So this is the opportunities we are working with. These are the countries, the companies or the governments, projects and so on that we have identified and is working with. And there's a net increase of this of 400 million Norwegian kroners. And then the recent award has been taken out. So we have a total of 8.3 billion in our CRM pipeline. And this is not our thinking that this is where the market is going to be. This is simply opportunity by opportunity, all added up. So build it from bottom up. So it's a very important part of how we measure the market and our potential going forward in the market. And then part of this that's turned into a good thing is the OP46 award. So this is a major event for us as a company. All revenues that we have collected up until now has been related to a helicopter drone or a vertical takeoff drone, a rotary wing drone. And all of a sudden we are opening an entire new market that's bigger and it's more mature than the current market we are in. So fixed wing, it's a completely different market. With this award, we are also going for a very competent company like Textron we're working with. This platform has more than 500,000 flight hours. So the technical maturity and technical risk is at its lowest actually than what we have seen before. What we have done, instead of investing in an opportunity that we didn't have in hand, we are bidding for a contract that we won. There were 5 other bidders, and we had 2 bids with different technical configuration, and we were awarded as number 1 and 2. And the contract is basically offsetting the risk of entering this area. So we are doing the investment in 2 systems, but the contract represents a 60% utilization of the assets. So there is a surplus utilization that we could sell to other customers, or we could fly more on the contract, basically using it quicker than the 4 years. And these assets are flying up to 15 hours of flight. So the amount of data they are collecting is more than 3 times more than with a camcopter flight that we are currently doing. With the camcopter flight and emission monitoring, we are world leading in that niche segment. So we are building the market. When we're going into the fixed wing market, we are competing with manned solutions for fixed wing, which is more costly. It has a much higher CO2 footprint, and we are adding a lot more data into this. And we are doing this in an extremely fast manner. So within 4 months, we're going to build up capacity within the fixed wing area. We spent 12 months to do that within the rotary wing area, and we did that before we had any revenue. At this time, we are doing it what a government or what the Air Force would spend 2 to 3 years. We're going to do it in 4 months. That also gives us a huge competitive advantage when you compare with the market. So due to our organization, our systems that we have, we are able to pull that off. And we're going to do the first flight next month, mid-September. And then based on that successful flight, the contract will be signed. And we're going to start first deployment in Q1 next year. Following next system delivery, and then in Q3 next year we are expecting full operations of 2 systems. This is also on the flip side of this, we also do system integrations on this. So we are in several opportunities where governments in Europe are going to buy a tactical UAV system, as this is. And we are building up both the operational understanding, we are building up our training capability on the piloting side, on the technician side, and we're also building up a Norwegian spare parts center, all related to this contract. So it's spinning into commercially operations. Well, we're going to go operate very quickly. Then secondly, it's spinning into system integration deliveries for the coming years. And that's a very important part of this contract as well. So very, very important for us going into the fixed wing market. Same thing with AirRobot in Germany. We spent kind of hard to do M&As during COVID-19 and quarantines and everything, so it took a bit longer than we hoped for with the teams meeting. But basically, AirRobot is the main supplier to the Bundeswehr for drones. Germans are normally buying from German companies, especially in the armed forces. So for us, this is a perfect match. It gives us access to Germany. We have the German Ministry of Interior as a big customer today. They all serve from Norway. This gives us a local footprint also for existing customers. And it also adds more IPR to our portfolio, and it takes us into the logistic, the last mile or the last mile's delivery market as well. Importantly is also that we are moving from drones as a toy. That was years ago. But with this company, we're moving into ISO 9100 certification. So it's basically a airline manufacturing certification. They have 2,000 square meter of production area, and it's going to be an important part of us going forward. We expect the German Foreign Investment Control approval to be in place in Q4, and we will be consolidating numbers in Q4. So quick one on innovation. This is a radioactive sniffer that we have made for our existing Lockheed Martin platform, so it goes into our system integration portfolio. It basically detects radioactive substances in a port and elsewhere. And for our customer, it's simply a sensor that adds a new data layer to the existing platform. So this is a commercial product now. We're going to do first deliveries of this next month. And it's showing how quickly innovation is going and the scalability when you have access to the market already. If you look at the contractual triggers, we have 6 of them listed here. We do this every quarter to let the market and the investors understand a bit more what to expect going forward. It also reflects what is going on in the market. Bane NOR, the Norwegian Rail Authority, they have a framework contract tender out. Offshore energy is carried over from last. It's taking longer than what we hoped for, but it's becoming more relevant than what we have seen in the past as well. Joint police tender, that's ongoing. The final contract signature of OP46 is in here as well. OP1 is still with the European Maritime Safety Agency. It's around €8 million contract for. And it's going to be in a couple of months' time. And then finally, German Armed Forces. So the German Bundeswehr new lightweight drone contract is out, and obviously AirRobot is bidding for that. So that's in here as well. If you look at our guiding, we are expecting the 2021 revenues to more than double from last year. So it's very similar to what we have said before. We are on the staff side. We are in line, or basically we are above what we said before. We are building capacity. We need to have people in 3 months before they are generating revenue. We need to train them. They need to learn what it means to be in a fast-growing company, and we need everybody to be moving in the same speed. On the EBITDA level, we are expecting a 2021 EBITDA that's significantly higher than the first half year of 2021. What is happening now is we are moving into a phase of implementing the fixed wing. So the cost of the implementation is something we need to take. And it's a bit unclear how quickly we will adapt to that. But at the same time, we need to take full operational advantage of the equipment we have, the employees we have, and become a bit more efficient in the operation. So there's a bit of growth cost, but at the same time, there is a strong EBITDA in the business units that is underlying that. 1 to 2 M&As in the second half. The fleet will continue to increase the fleet value, and we are targeting 200 million fleet value by the end of the year. And we are keeping the 2 billion 2025 revenue target as well. And we will come to that now, the strategy update, how we're going to do that. We have spent quite a lot of time on the strategy, and the problem, or not the problem, the great thing with our industry is that there are so many opportunities, and it could become a problem. So where do you go, basically? So in reality, the Q2 numbers reflects the first quarter, where we have basically tested the organization on how quickly could we grow. What is possible to do in 1 quarter. And at the same time, we are proving to everybody that, okay, but we did a tremendous growth. We know what it means to do a growth, and we're going to continue to do 3-digit % growths going forward to achieve our 2025 targets. So the question is, how are we going to do that? So first of all, if you look at the macro factors, and we are looking at 4 different areas, and we're seeing a change in this. On the economical side, we are proving the return on investment for the customers much more than before. It's verified, it's scalable, and it's ready for the next phase. And with the type of customers we are targeting, governments and large companies, that means that the entry-level contract are pretty large. So it's a change of approach, and that's maturing. The environmental footprint is a key driver. So we have less emission of CO2. We are providing a lot of environmental data, and we are seeing that our governmental clients are seeing more and more value in the environmental data we are providing them with. But it takes time in governmental organizations to understand what is the next phase of that. But the environmental footprint in our industry is very positive, and it's driving the use of the technology. And the technology capabilities are getting better. They're getting a lot more mature, a lot more stable, and it's much easier to do contractual commitments based on the technology, because it's proven a lot more than before. You could finance it, you can insure it, and you couldn't do that a couple of years ago. And then finally, the regulations, they are in place. So there is no risk related to regulations in Europe anymore. We have, with our Lux, when we are going into the fixed wing market, it's simply adding a new operation and a air vehicle to our existing permits. But we see the US is affected by this as well. They will come soon as well. And the rest of the world is looking to those who are the first movers on a regional level. So all of these 4 macro drivers are pushing in very quickly in the right direction. So we are reshaping a bit on our market verticals. So going forward, we will divide it into maritime, our sea-related operations, taking off from vessels, taking off in ports, taking off from land, but it's all related to the maritime. It's a very good area to scale quick in, because the flight permits is easy to get and the ground risk is very low. So that's the green solutions will go into maritime. Defense security will go into security. It's also an area that's growing really quickly, and it's going to be important for us as well going forward. So instead of talking about digitalization, we have been much more specific. We're now talking about infrastructure. And infrastructure is rail, is telecom, hydroelectrical, offshore energy, and road assets. That's where we're going to play in the infrastructure area. And then the last part is the logistical side. We are also talking about business risk and market maturity. So we all understand what we're talking about, but the logistical side is divided in two. It's system integration activities for large 3PL logistical companies, and then it's urgent and high-value same-day delivery of niche applications that we will do as an operator. And if you look at this on the business side, on the maritime and security side, this is our current business. This is where most of the revenues are coming from today. But then on the infrastructure and logistical side is the exploration side of where we are moving. Then we have our solution horizon. So we have 3 different solutions. This is the intelligence, data collection, storage, filtering, analysis, distribution, and so on. Whatever we can do with data to add value for the customer with the data. I think for now we are probably using 5 to 10% of the data we're collecting. The rest is untapped yet. So that falls in here. Then the second solution is integrations, system integrations for larger or smaller drones, and it becomes a system of systems, all connected together. It's got a higher technology risk than just the intelligence side, but it's the direction we are moving. So everybody's asking, when will you have a fleet of drones that autonomously flies around and is doing everything? It's going to happen within integration, and it's going to happen over time. It's not going to happen overnight, but that's why there is a higher technology risk. And then it's delivery. So our logistical solution, the logistical transportation, is driven by reduction of carbon footprint, by risk reduction. It's driven by same-day delivery, urgent paracels, and it's driven by the convenience side as well. All of that is driving the delivery part of it. Obviously, it has a higher risk, but it also has a great return. The technology risk is also higher, it's medium, but that's due to the maturity of the side of the business. And this is our segment model. So basically, we're not going to be everywhere. We're going to be within the segment model here. Within maritime, we're going to do environmental. We're going to do safety intelligence. We're going to do system integrations and deliveries. Within security, we're not going to do environmental and delivery. We're going to do safety and integrations. Infrastructure, environmental and safety intelligence. We're going to do integrations, but we're not going to do delivery within infrastructure. And within logistics, we're going to do integrations and delivery. That's what we're gonna do. So going forward, everything happens within here, both externally and internally. It's going to be a roadmap of where we are moving. Okay, so when you combine these and you say, okay, so we have a target of 4 billion in 2025. Where are the drivers for the 4 billion? So maritime has a target of 800 million. And the interesting bit there is when you look at those 800 million, 21% will come from large rotary wing, so basically scaling further on what we are doing today. 36% will come from large fixed wing activity, our entire new business line that we're going to just introduce now. And 43% is going to be small rotary wing or fixed wing systems. As some of you know, we are also a reseller for the smallest fixed wing for Lockheed Martin. We could be a reseller and operator of that as well. So we basically have all the tools that we need to do this part here. And 4% is going to be emission monitoring. We're going to continue to be the leader in this category, but we'll go beyond Europe, as we have said before. Interesting enough, the current CRM pipeline attached to this area is more than 2 billion. So the 800 million is going to come for the existing CRM pipeline and the development that we see in the market. And on the CAGR side, we are working on estimates. It's so hard to find what this market growth, because we are targeting part of it, we are building it as we go, and we are a disruptor to collect data in a different way. So we are using estimates of what we find in the market, different reports in the CAGR side. On the security side, the target is 1.1 billion. 33% of that is going to be own IPR driven. 25% is going to be reseller activity from other OEMs. 8% is going to be lifecycle support, and 9% is going to be operations. Again, interestingly enough, our current CRM pipeline is almost 6 billion. So if you look at our win rate in theoretical terms, we are pretty close of having enough CRM to play with. This market is driven by long sales processes. So it's not something that's happening very quickly, so you need a very good CRM base to go there. And again, maritime and security, that's the most mature part. That's where most part of our revenue is currently coming from. When we're moving into infrastructure and logistics, we have two new targets. So the target for infrastructure is 600 million NOK. 70% of that is going to be from rail services. And we launched this week our rail drone, the Stalker BG300. For those of you present here, it's displayed outside as well. And we spent a couple of years on this, developing it. Actually, the first main contract we landed as a company was in the rail industry. And that's more than 4 years back. So we know rail, and rail is very conservative. It's taken time to mature and to understand where to go. But we have two focuses. First is rail maintenance, lubrication of rail switches, very standardized in rail, very few different switches. But the reality is that when you add an IoT sensor to the rail switch, saying that I need maintenance, who's going to maintain it? Is it going to be a digital or analog way? Is it going to be a man or a drone that's going to do it? We see a great area in that segment. And then the second part is rail intelligence. When you are on the rail asset, the rail with its surrounding, it's something we're going to specialize in. Then 30% of the 600 is going to come from telecom, telecom mast, roads, bridges, and hydroelectrical assets. And our IPR is going to be quite large here. So we are approaching the rail not as a system integrator, but mainly as a service provider. That's our approach in this market. And our competitors are not drone companies. They are the ones that are doing manual work on the rail today. And the issue is that to go into the rail site, you need to close down the rail. It's a high risk, so obviously the company trains. So what we are trying to achieve is to support the rail asset owners to have less downtime on the rail, so they can move more goods and people on the rail assets. But it requires more maintenance, and they need more data to do so. So that's the 600 million. Then it's the 1.5 billion on logistics, which is probably the one with the highest risk between the three of them, but it's also extremely interesting part of it. So we look at 85% as a system integrator, meaning with the recent, we have two platforms. So we have the recent acquired AirRobot platform, so the skid system, how you can put 10 drones in a van and then do deliveries from the van. But we're not going to do the delivery. We're going to sell that as a system to a 3PL provider, or we're going to connect that into a smart warehouse. So you can collect the goods quickly out of the warehouse, probably quicker than you can collect them and send them further to the customer. Both of those areas will fall in the system integrator side. Second part is operations. So business to business and business to government. We've already done this for Equinor when we proved the flight and landed out on the Troll platform. But we have identified niches. So we need high willingness to pay for our same-day delivery, the urgency of doing the delivery, and the availability of doing that flight. So we can't find a business model where sending a small package is what's going to drive our revenue. We need to come up with an entire solution, and we need to be paid to have that solution available as well. So we identified niches that we're going to target. We're going to come to port. Port logistics is one of them, the niches. But also, how could we support in the urgency on the medical side? And also for brand owners, how could drone delivery become part of how you want your brand to be perceived? It must matter how you get things delivered. If you have a boring brand, you can put it in a boring box. But if you think there is a connection, then you should start to think about how you get this delivered. We already seen Coca-Cola signing a contract for that, and they are saying it does matter how a Coca-Cola gets delivered, which is a very interesting approach to this. And there are many of those brand owners, and there are many of them that has a more expensive product than Coca-Cola. So this is where the 4 billion target is coming from. You see the current CRM pipeline in logistics. It's actually 562 million. We are currently having these types of conversations with Norwegian, European, and American companies. Our target is not coming from what we believe. Our target is simply reflecting what the customers are saying. And what that means within different sectors scaled up for 2025. For system integrators, it means the production in Germany needs to be a bit higher, the production facility, but it's all part of the plan that we are looking at. So business to business and business to government is where we're going to do operations. And this is the roadmap, how we're going to get there. So we are looking at our horizon modeling on where we are today and how we're getting to 2025. We can't do everything at the same time, but we're going to go for maritime intelligence, and we're going to add methane sniffing. We did our first technology qualification of that this week. We're going to go for particulated matter. So in the maritime industry, when we have full control over what sulfur and NOx emission we're seeing, the next phase is carbon and particulate matter, and then we're gonna go into green certification. We see that Sweden have the port fees in Sweden is not fixed anymore. It depends how green your vessel is, and we're going to support the ports and the vessel owners in that phase with doing monitoring and emission monitoring of the assets, and we think that's the way things will move. We also think in the oil and gas industry that you need green certification. We all, or most of us at least, accepts that the oil and gas industry is going to stay for long. But if they're going to stay, they also need to be as green as possible. And we'll support with that by adding new technology, forcing them to be more certificated. On the rail side, we are moving from the current simple rail inspections into rail switch lubrication and interaction with rail IoT sensors. That's moving a bit further ahead. On the port side, what we've done in the port of Antwerp, which is a big port, we have identified 15 big ports of the world where we want to be. So that's moving into 25 or that direction. On the defense side, currently we have only done small drone system integrations. A small drone means it's great, you get a good data set, but on the revenue side, it's not a steep revenue growth. So next phase is moving into larger drone system integrations, like with the Aerosonde, what we're going to do. So what do you want? Do you want to buy it, or do you want us to fly it? Do you want us to train you? We have the full commercial portfolio to offer on these systems, and we see that the competitors, they are not ready to do that yet. So we see an opportunity there. And over time, into 25, the autonomy of these systems is going to change radically. So today, when the Norwegian police is out and flying, they are simply taking the drone out and they are flying it. But during this period, it's pretty obvious that that drone will be stationary on a police station and will be sent out based on what the operator, where it wants it to be in the city. That's going to happen all the time. And then on the delivery side, we talked about it. We are currently onshore to offshore, but ship to platform is the next phase, suburban and full port delivery solution as well. And many is asking us why are we what is our competitive advantage, what is the secret sauce and everything, and it's all about obviously the organization. And going forward, the challenge is to continue to be a front runner, but at the same time become more structured than we are today. We are becoming a bigger organization. So operations, that's what we do, and it's still going to be the source of revenue. But we're going to add accelerator that's going to have a solution development lab. So we're going to do a bit more testing before we add it as a product. We're going to add corporate venture as well, and we're going to be more structured in our business model exploration, because we need to continue to be innovative. We need to continue to understand what's going to happen in the market. Then we're going to add, in a more structured way than today, advisory. So we need to collect and structure the know-how, and as we fly and as we learn, we need also that to be used elsewhere in the organization. It's going to be a very important part, and it's been a very important part in what we've done. But to be a startup, it's easy to, you know who to ask, but we need to also know what we know when we become a much larger company. And we're going to have a center of excellence. We have a lot of new sensors, a lot of very specific data that we are collecting, and we need expert that's going to help us with that. So organic growth is still our key focus with long-term contracts, but we will be expanding our graphical footprint as we have done up until now. So we're simply adding the size of market we are approaching by going into the US, by going into the Middle East, by going into South America. We have not told anyone about the plan is for US yet, so that's probably going to come over the next half year. And we will continue to expand relevant products and services in our portfolio, meaning it needs to have a commercial traction. We need to see there is a customer at least showing interest or is willing to pay for it. And we're going to continue to explore new opportunities. We want to keep the entrepreneurial spirit and approach, and let the organization try and fail in the exploration phase. We're going to continue to look for M&A opportunities with current revenue driving technology. We need teams, full teams that we can add in. That's going to be a lot quicker for us. And we need more market and client access. So with the two MOUs we've had, basically we don't know the local ways and do's and don'ts in those regions. So we need local people to support. Okay, so emission monitoring is still going to be a big part of what we're going to do. It's going to be a big part of our growth, but we're going to go into port authorities, the oil and gas industry, and green certification as well. And we see traction in Brazil. We see traction in the canals, Panama, Egypt, big ports in Singapore. But these we're going to play in all markets with this product, large and small platforms. So the Stalker BT200 will have a mission monitoring capability within a month, so we can offer it on a short range and long range. Oil spill detection is what we do today for the European Maritime Safety Agency, but the energy industry and the maritime industry needs to move in this direction as well. If you have oil, you need to have the best technology to detect it if it doesn't move the way you want it to. Focus, Europe, Middle East, Brazil, and it's simply scaling on what we do today. But it's going to become more sophisticated, it's going to be more data, there's going to be more AI as we move, but it's not something that's going to disappear, but it needs to be controlled and it needs to be used the best technology. Search and rescue, again, we are doing this today with the OP46 award. Search and rescue is a big part of the scope, and we're going to play here as well, both for governments and the offshore energy sector. We have different assets to offer, and currently we are offering a search capability, and during rescue, we are providing live stream. So what we are doing is providing data, not to the pilot on board the aircraft, but to the tactical and strategic level that is planning the search and rescue. So this will be an integrated part of the manned aviation going forward, and even though manned aviation doesn't like it, many are now seeing that it's also a cost reduction side, there is a risk reduction side, and the assets that we're using for rescue will be ready to do rescue when the drones can do the search. So we're gonna play here as well. Rail maintenance and inspection are extremely exciting area. We were very excited about showing the video of how we're gonna do this, and there's a lot of development to be done. But basically, we're gonna be in Norway, we're gonna be in Germany, we're gonna be in UK, France, Spain, and US. That's where we're gonna be. Huge assets available, huge markets, a lot of complexity, but we're not gonna go everywhere. That's where we want to go. So we're gonna lubricate rail switches. Actually, we already done that. We already tested and compare the IoT sensor, how it detects the effectiveness of a manned lubrication and a drone lubrication. The drone beat the man at first trial. So it's a very simple task in a way, but a very important task to keep the rail assets up and running. And the data that we could be collecting, it's all rail data, surfaces, tunnel bridges, heating, and the overhead line. All of that is relevant. Today, this is done with huge locomotives, so digital locomotives, very expensive, very slow moving, and they're keeping the track closed. So we want to do it quicker, faster, and more regular than what it is done today. Smart ports. So we all heard about smart cities, with politicians deciding on how is a smart city going to look like. The great thing with smart ports is that it's commercially driven, it's one authority, and it's starting to happen. So how can we support within the fenced area of a port, high willingness to pay? International shipping is not going to go away, quite the contrary. So we're going to do monitoring of the port environment, is what we have done and trialed and explored in the Port of Antwerp. So all types of environmental data sets, including radiation monitoring. We're going to do emission monitoring of all the current gases and the future relevant gases in the port. And as I said, we believe that the cost of going to port is going to be driven by your environmental footprint. And those who have a high environmental footprint will need to be paying for those with a low, but a third party needs to be verifying your environmental footprint. And we're going to do time and cost critical deliveries. If it's anchored outside, what kind of shipping papers do you need? You need medical supply for your crew, because the cost of going into port is high. There is a high willingness to pay of doing that. But also internally in ports, huge areas, a lot of traffic, a lot of small important goods to be moved that is urgent. Short range suburban deliveries. So we're going to do full system delivery. We talked about that. It's going to be urgent, high value. There's going to be drivers of where we want to go. And it's going to be US, Europe, Middle East, and Brazil. We are already in commercial conversations in all of these markets already. And we're going to have full fleet solutions. So to sell just one drone doesn't scale. It doesn't solve the problem. We need to deliver a full fleet and to solve the entire logistics from where you are collecting the package to where you're delivering it. It could be middle mile. It could be from an airport to, so from Gardermoen to Lillestrøm, and then there is somebody bicycling that out or whatever. We don't believe in the urban area because it's so much cheaper to find other solutions, and also from an airspace point of view, it's much harder to fly. But that's why we are very clear on the suburban area that we're talking about. And we're going to do niche sector deliveries. We all know that the medical side is a low-hanging fruit, but it's not done yet. But convenience and shopping experience will be probably first movers and will pave the way for a larger use. So extremely exciting, and a lot of big players that are both failing and entering at this market. Offshore logistics, brownfield and greenfield. We believe that greenfield need to plan for how drones will support the assets with logistics. But there are a lot of low-hanging brownfield opportunities. But it's going to be North Sea, Brazil, and Middle East. That's the focus. And we can deliver up to 200 kilometers range. Actually, the Aerosonde that we got the OP46 contract for could also do those types of deliveries, but that's not what we are exploring at this stage. But it's going to be shore to offshore, offshore to offshore, and vessel to platform. So if you have unmanned platforms, you have a manned platform, and that manned platform needs to support the others. All of that is the scope of offshore logistics. So we found obvious opportunities based on our know-how. It's not necessarily obvious for the rest of the industry or for the investors, but for us, they are kind of coming to us as, oh shit, that's obvious. So we have had a focus there. We want to compete as early disruptor. We don't necessarily want to compete with other drone companies because then we're not early, but we want to compete with other ways of solving the customer's problem, other ways of collecting the data. And we want to deliver more data for the money. We don't want to ask for a larger budget because it takes too slow, but we want to deliver more data for the same money. We have focused on acceptable margins over time. Where is it scalable? Where is it a long-term willingness to pay? And whatever we do, it needs to be scalable on a global level. That's a very important part. So that was a quick one, a bit over time. So I'm open for questions.
Yeah, so we have maybe time for 2 or 3 questions. We'll take all the online ones. But
yeah, so I can take the ones listening in here. I can take face-to-face afterwards.
So the first question is, how rapid will the growth be in Nordic Unmanned opinion, and what is expected revenues in 2022 and 2023, and how will further growth be funded?
Yeah, so the rapidness of the growth, as I said in Q2, we have explored how quickly can we grow, and we managed to grow 286%. So we know what it means to grow 286%. And even though we did that growth, we could have grown more because there were some of the revenue carried over that we didn't manage to basically do. So we're going to grow as quickly as we can from a commercial point of view. So that doesn't change. On the funding of the growth, we are looking into profitable growth still. So that's part of how we're gonna fund the growth. And we are targeting type of customers that are governmental long contracts when we are doing the growth.
Yeah. Another question is, do you have any update on the OP27 contract?
Yes. So the OP27 contract was not awarded. It was taken back by the customer, and it's going to come out for a new rebid within we don't know, but it's going to come back out again. So basically, it's changing slightly the scope and changing the way they want to use the contract. Is what the answer was. So we're going to be bidding for that when it comes back out again.
Yeah. Can you give any flavor on what normalized margins are expected to be, EBIT and EBITDA, when you reach proper scale?
Yeah, if you look at the different business areas, as Trond said, we are in this first half in our most mature business area, Green Solution, which is now turning into maritime. In the last quarter, we have been looking at margins in between of EBITDA margins of in between of 30 and 40%. So that's one business area. So the 4 business areas will be different. The ones that are most immature will have the lowest margin. There is a higher commercial risk. Things will not go as we planned. But what we see is that when we get into a level of maturity, we are achieving quite good margins. So obviously the average margin will be reflected by how quickly we grow, and the exploration of new areas that we are growing into.
Next question: how much of your 4 billion revenue target for 2025 is assumed to be organic, and how much inorganic?
Yeah, when we are looking at that, we are thinking that whatever we do inorganic, we need to do within the next 12 months. So we can't buy ourselves revenue, but we can buy teams, we can buy market access, and we can buy technology now. And those M&A activities will have an effect on the 2025 revenue. So the question is when you cut off from inorganic to organic. But actually quite a big part of it is related to what we do now. The AirRobot acquisition is a big part of what the 2025 will do, and so will a couple of that's the way we are thinking about the next M&As. They need to bring considerable value in 2025 already now.